Hey, good morning. All right, so we're on the daily FX. All right, so something you want to look at is when you look at the signals. Now, we just don't go off the signals. Um, they could be helpful, but you don't want to depend on just the signals. All right, but here's a little tactic you can use. So on USD, sorry, CAD, we have mixed. Now, when it's mixed, typically it goes with the majority when it's mixed. All right, so right now, 60% are short and 40% are long. So we do want to look at a contrarian, bias on this, and we're probably looking for buy setups. However, when it's mixed, we have seen some that actually go with the majority. So let's take a look. All right, so right now we're on a 30-minute chart, and we do see that we have been in some form of a correction, right? So we down, we got wave one, pull back two, all right, we got three. Now, here's what some people can get confused on. Now, earlier I entered a short position right here, and these are my targets. However, I got out of the short because this double bottom did pop up, and then I became unsure on how I was going to trade this. So when in doubt, stay out. So guess what? I closed for a smaller loss, like 37 cents. I wasn't heavy. Like I said, I normally start with a small lot size, so it's like $1 lot size. And I just didn't like. I was conflicted because I could see it going to these levels, and I'm gonna give you a reason why. So I'm gonna walk you through this trade, and let's take off the double bottom for right now, so it can look crisp. I'm gonna take off all these levels. All right, and we're gonna go on a bigger screen so you guys can see. All right, so we got this. Now, what I did was I take my Fibonacci retracement tool, and I want to see where does these levels line up. Does it line up in key market structure? And it does for the most part. So right here, this is the 50%, and we see that level has seen some massive price movement come out because we got a rejection tail on this particular candle. And as you see, we got pushed all the way up. So this is a demand zone. All right. So price is back into this demand zone. So that was another concern. Now, look at the 61%. If you've seen the Fibonacci videos, I talk about the golden ratio, which is 61%. Look here, we got another demand zone. We got a candle that engulfs this candle. So it's a demand zone. So I technically have my box here. So price is in the demand zone currently. And here we go. And this is another zone. So this is something called confluence. Confluence is when multiple uh, strategies, indicators, price movement all line up. To have confluence, what is going on? Let me take this off. To have confluence, you need two or more um, things to line up. So right now, we have this zone that lines up with what? The golden ratio. And this zone lines up with what? The 50% retracement level. So it gives us some confluence to where price currently is at. Now, could price do something like this where now it's back in the zone? We get back up here. We could test either this level or this level, and then maybe come down and get that. That's possible. Okay. So I have to take that consideration. Right. Now, the reason why I got out of my short, once again, I'm in a demand zone. Okay, that was the main reason. I somewhat prematurely like just jumped in, but then when I looked left, I was like, I'm still in demand zone. I don't know if I want to take that trade. So once again, when in doubt, stay out. So I was doubtful. So I was like, it's not a clear. However, we're gonna put back on the double bottom. Let's see if it pops back up. And I think it took it off, all right, because it retraced more than what it was supposed to. But you saw earlier in the video, the double bottom did come on. So this is how we can trade this. I could do a bracket order. All right. So I want to see price eliminate this level because this is right now somewhat a resistance point. I will put in some form of a limit or buy order, right? All right. So if I wanted to, I got over here, I got a buy stop. I could put a buy stop order right here. All right, it's the bracket. So I feel confident that if it breaks this level, we could come up here and visit these levels. Now, like I said, the double bottom has now been knocked out. So it's fine. Now, yes, I will be up. I'll be doing good right now on that. And I still can get back in. I need to see this level, this demand zone really knocked out because we're still in demand zone. So what I'm going to do, all right, remember, when you mark up your zones, you want to take the last candle before we see price move out of that particular zone. So if you look right here, we have what? This is the last candle. This candle engulfs, all right, and price leaves. So this is where we measure our level at. And you see right now we're still in this box. All right, but let's see what this price can do. And if we can break and close below here, but then I will be looking to take these down to the next level based off the retracement levels. And it's look like it's going strong, look like we actually can get there. But I'd be looking back and say, oh man, I should have just stayed in the trade, but I was doubtful. So I was when in doubt, stay out. Now, there's two things I could have did too. I could have just um, just had a stop loss that was just tight. So basically at this level right here. So if price came back, I would have got knocked out 8 pips. And I did think about doing that as well too. Okay. So that was an option. And I could have taken that. And if I would have taken that, I'd be currently up right now on this because I got in about right here. So in here. All right, so I'd be up like 8 pips. Okay. But here's a good thing is that if I would have uh, got in right here, and then there you go. So I would have had an 8 pip stop loss. So that's not bad, all right, to get down to these targets over here. Okay, now once again, I still can take this trade either back to the downside or wait for price. So I can put a buy stop order. I don't have to sit here at the computer just looking for it. And if price comes back up here and engulf this, I have some target areas, preferably be up here for a little bit more of a major market structure area. And you see what I just did, right? So you see this green candle? Well, this red engulfed it, and this was basically the last candle before price eventually just moved into that direction, right? So this is what we call a supply or a banker's candle. Some people call it. So a baker's candle is basically the last candle before a trend reversal. So, we're up, up, up. This was the last candle. This one took it out. And we now are establishing some form of a new trend or a temporary trend before it resumes. So now we're at crossroads. We want to see how price really reacts at this level. So we could put a support zone right here. So it's breaking. It's looking good and going a lower time frame. And it could give me another opportunity to get in to go short. Yep. So let's break it. Now, check this out. If I wanted to take this short, all right, what I would do is I would put my stop loss above the counter that got engulfed. So this counter got engulfed. All right. So if I enter this trade, then that means this my stop loss has to go above here. Now I can bracket this thing if I wanted to. What it means is I can have a stop loss above here, but I also can have a buy stop order in place. So while your stop loss is getting hit, you got another one that's getting triggered to go long. So that's a little bit more advanced strategy. We'll just get into that a little later, but that's how that could actually roll. Now, like I told you, when in doubt, stay out. You're gonna always have opportunities, guys. If you feel like I can't get a feel, I don't know what's happening, just chill. You don't have to force yourself to trade. A lot of people think they always have to trade. No, I'm fine. And then sometimes you're gonna see that you got out and you wish you would have stayed in. That's part of the game. And then sometimes you get out and you're like, oh, I'm thankful that I did. It is what it is. There'll be more opportunities to come. Okay. Um, so I want to see how this roll. If this candle can get engulfed, I might look into taking it short to go ahead and finish it out. Let's see what we can do if we get down here. If I did enter here, get back down here. About a 15, 16 pip. It could be worth it. May not be. All right. So you see how the confluence could work with the different levels that I had already put up. And like I said, you got your buy stops and limit orders you could put in place. So for instance, I could do a sell stop. All right, so it's placed below price. So right now, I could put a sell stop right here. If price comes down and hit it, it'll go ahead and put me in a trade, and then I set my targets to this zone. I'm good to go. So you can do that as well too. So a lot of people think they're supposed to sit at the computer all day. I could set my zones on the target. On the chart. So let's say right here, I have that I want at this 1.3438 for our sale order to be commenced. As soon as I get here, boom, get us in a trade. And I might say, hey, I want to get out here or I want to get out here. And these will be my take profit zones. So the computer can do all that for you at MT4 and whatever platform you're using for your Forex. They have the stop and limit orders in place as well too. Now, let's say I want to sell order up here. If price gets up here, I automatically do what? It'll automatically sell. So as soon as price gets to this zone, it can sell, and you can already have your TP back down to this area. That can happen too. So these limit and stop orders are really good to help you not just sit here staring at the charts all day. You can set your levels and you go about your business, and you can set your stop losses as well too. But yeah, so like I said, this trade, it sort of had me confused slightly because that double bottom had showed up. But once again, I was using a strategy that basically I knew a level had to be eliminated before um, I was willing to take the trade, right? So that helped me to be a little bit safer. Okay. Let's go look at another, see if something else shows up. So I can show you. All right, let's look at this one. So it's already occurred, but it's good for you to see how you can be a little bit more patient. That just because a double top just pops up, you don't have to jump in. But we can have look. So if this popped up, we want to see something engulf. So you would have a limit order. I mean, stop order. I'm sorry, a limit order right here. So you have a sell limit order. All right. So price is up here. As soon as it crosses that, engulfs it, boom, you're in the trade, right? So you don't have to be sitting here staring at it. Now, yes, somebody can get in early, but sometimes what happens is this: the double top will be here, and then this will push a little higher. Now, this is not a lot of room, so that's why I also suggest if you're gonna do the double tops and bottoms, like let's say this one created the top number 2, you want to have room It's at 29, but 30 pip. Some of you don't like that because you're probably too heavy. So if you're heavy, you're gonna have to give yourself room. All right. So if you want to do a standard, 5, 10 pip stop loss, 9 pip stop loss, you gotta know that if you're heavy, you gotta factor this in. That's an automatically L. So if you do a $10 lot size and you got a 9 pip stop loss, you already know that you $90 out. We hope that it goes in the right direction, but if you go ahead and say, hey, this is a loss, it helps your mindset. Because then you be like, hey, I'm not willing to lose $90. Then you have to change either your lot size or um, you just don't take the trade at all. It's just simple as that, right? All right. Look at this level right here. We have the indicators on, but they're not picking these up, right? So sometimes that happens. So that's why you still need to be able to identify that where there's a potential double tops and bottoms, right? So you got this one and you got that, okay? So you see we're in a potential resistant zone. So we could actually look for shorting opportunities here because price is having some difficulty in that area. And to keep this one small to minimum, you may say, hey, I'm gonna have a stop loss real tight right up here. You can do that as well too. You don't have to do the 30. You should do a small because now your risk reward is totally different now. Okay. So those two things you can take from this video. When in doubt, stay out. And if you feel like the risk reward is not there, either adjust your lot sizes or um, you can also adjust your stop loss as well too. So if I was looking to take this trade right now, I was looking to go short, and I know I have a tight stop loss. If it get hits. Keep it moving. I'm not risking a lot, but this could be a key area where price could show some form of a rejection to get down. See, so, but I'm not gonna keep it long in the video. But that's just a thought. It's moving decent right now. Let's go back to U.S. dollar CAD. See what it's doing. So you see we got some form of candle strong coming back in from this zone. What did we did? Let me go back to the 30 minutes because that's where I did it at. Here we go. Take all these off. All right, so yeah, it temporarily came out of the demand zone. It's coming back in, but yeah. So you see right there, like I said, when in doubt, stay out. To me, I just couldn't get a feel for it. I did get the direction somewhat right the first time, but like I said, I just went on and closed for a small 37-cent loss. It wasn't much. Um, I would be up, if I got in there, but it's conflicting. So sometimes that's going to happen, you guys, especially with those double tops and bottoms. You may have feel that the price is going to go, or you see the price could go somewhere, and all of a sudden you see, a double top or bottom, and then you start second guessing yourself. That could happen, but that's something we just have to all overcome and don't let it do that. So that's why I got brackets, orders on the chart, so that if the other one does play out, okay, I'll be good. And if the other one decides to do want to go in a regular direction that I had, I'm good to go. So that'll help save you as well too, to be able to have various order entries on the chart that if one is wrong, the other one to correct it and get you into the right direction. So that's a form of hedging. And like I said, I do a video that specializes in actually hedging techniques. Some of you're probably looking at this video now, you still feel like you're lost. You got to go through the other parts of the guide so you can be able to start getting up to speed so you can see what we're talking about. All right, that's it. Have a great day.